What's good, guys? It's Seth with SN22.com. So there's something shocking happening in the stock market that we must pay attention to, because this could lead to a 10 to 20% dump in the stock market, and this will badly affect the crypto market as well. So in this video, let's look at the S&P 500 and my short to medium term analysis for the S&P 500. As a reminder, I am only sharing my opinions, so nothing in here should be considered as financial advice. Now let's kick this off by getting the phase of the market cycle that we are in. So looking at the S&P 500, the weekly chart for the S&P 500, we see that the index is currently trading at about 2 standard deviations away from the mean. So the mean is over here at about 3,865 points, and then the first standard deviation over here is at about 4,235 points, and the second standard deviation over here is at about 4,758 points, right? And then looking at the chart, we see that the second standard deviation is also forming a confluence with the 2.618 Fibonacci extension level. And at this 2.618 Fibonacci extension level, that is when we usually see a 10 to 20% dump in the stock market, right? Back in January 2018, we saw this something similar after we hit the 2.618 and we got rejected, like we are getting rejected over here. We saw a 10% dump, right? So it is possible that we could get a 10% dump back to the first standard deviation at about 4,235 points, or we could even push even lower towards the mean, right? The mean is currently sitting at 3,865, so that is possible as well. But let's quickly look at the January 2018 price action, so you could get a good picture of what I'm talking about. So over here, back in January 2018, we see that after we broke above the 2.61, sorry, we broke above the second standard deviation over here. After we broke above the second standard deviation, we hit the 2.618. So this is the 2.618 over here. We hit the 2.618. Then after that, we had a 10% dump, right? Back to the first standard deviation. So after we hit the first standard deviation, we bounced off, we pushed back up, back to the 2.618 again. We broke above it a little bit, but we got rejected again and we got pushed back down, right? And then when we got pushed back down, we dropped 20%, and we even broke below the negative first standard deviation, right? So this is the negative 1 standard deviation, and we broke below that before we started the real correction, right? So in our current situation, I would be a little bit careful and look out for the probably a 10% dump. Or probably even more than that. So now we know where we are in the market cycle. We are at the top of the market cycle. But now let's look at the S&P 500 from the lower time frame to the higher time frame. Starting with the 4-hour chart, we see that the index is currently trading at 4,684 points, and the index is still trading in this ascending wedge pattern. And this ascending wedge pattern is usually a bearish pattern, and it normally predicts that price will break below the support line. So this is the support line over here. And it normally predicts that price will break below the support line and push lower. But now let's get a closer zoom, let's get in a closer view of the 4-hour chart. So let me zoom in closer. And then when we look at the 4-hour chart now, we see that the price recently got rejected at the 2.618. So this is the 2.618 over here. When the index came closer to the 2.618, it consolidated. But when it tried pushing above the 2.618, it got rejected, and we see the big rejection over here, right? So now we see that the index has been pushed to the point of control on the VPVR. We see that the price is currently trading below the point of control. So if the price continues to trade below the point of control, in case we get a second candle close below this point of control, then we will probably end up pushing lower towards the support line. So this is the support line over here. We'll probably end up pushing towards this point over here at about 4,600 points. So that is something to look out for next week, or probably even this Friday as well. But now let's look at some indicators. Let's look at the RSI. The RSI shows that the S&P 500 is losing strength. The RSI is currently at 41, and the RSI has recently broken below this upward trend line over here. So the RSI is currently below that, but this trend line was acting as support as the S&P 500 was gaining strength, but now we have broken below that, and this is confirming low strength for the S&P 500. But let's look at the MACD as well for confirmation. So from the MACD, we see that the MACD line over here, the blue line, is below the signal line, and this is confirming a loss of momentum, and also confirming the loss of strength in the RSI as well. But let's confirm again using the squeeze momentum. So looking at the squeeze momentum over here, we see that it is indicating a low momentum, and also confirming the loss of momentum in the MACD, right? So the MACD was showing a reversal, and we are seeing the reversal confirmed over here in the squeeze momentum as well. Now from the daily chart, we see from the VPVR that there's a high volume traded in this zone over here. So there's a chance that we could bounce from here and push higher, but I am leaning more towards the downside, since we've had 3 confirmations in the lower time frame that it is much more likely that we'll push lower. So I would expect the index to push lower towards the 4,600 points over here, and that is where we will probably have the judgment to see whether we'll break lower. If we do break lower, then we'll probably see the 10% to 20% dump in the S&P 500 or the stock market. So we definitely do not want to see that. But now let's confirm my analysis in the daily as well using the indicators. So looking at the RSI, we have a confirmation again. Over here, the RSI is trading below the trend line, the upward trend line. So strength is low at the moment and is confirming low strength for the RSI. The MACD is still, the MACD line over here, the blue line is still below the signal line. So this is still confirming a reversal. But now let's look at the squeeze momentum. And the squeeze momentum, we are not yet seeing the reversal confirmed, but this is confirming low momentum as well, right? Momentum is dropping. So there's still a high chance that we'll push lower. So we want to watch the 4,700 points level and the 4,600 points level. If we break below 4,700 and we do not get a bounce at 4,600, then we increase our chance of a 10 to 20% dump in the stock market. And that would definitely affect cryptos as well. Cryptos will probably suffer probably a 50% dump. All right, so that is something to watch, but make sure to help a brother out. Hit that like button, hit that subscribe button. My name is Seth, and I make content that makes you more money. So if making more money with cryptos or the stock market is something you are interested in, then definitely hit that subscribe button and turn on notifications as well. And let me know which other stocks or cryptos you like from the cover in the comment section.